On the vol side, we have had a decline in realized volatility. Bitcoin kind of back to the low 30s, and ETH actually getting back into the mid 50s now on realized. Front end vols down about 3 points in Bitcoin and about 7 points in ETH. So for a change, ETH vol getting smacked harder than Bitcoin as it is calming down in terms of movement. Carry's pretty flat on Bitcoin right here, but we are positive on ETH, as you can see, by a decent amount. We're looking at maybe 8 vols positive carry, something like that on Ethereum there. The OHLC charts are showing quite just how range bound we've been over the course of the week. We've kind of been in the middle of this implied range, implied move, sorry. And, we did have a visit to either end early last week, but you can see it basically tagged the implied move and then mean reverted straight away back to unchanged, right? So it didn't stay there for long. And Ethereum's been very quiet if you look there in the middle of the range. So in general, pretty good environment for people who have been selling gamma. I haven't been one of them. I'm generally not a fan of selling crypto gamma at these levels right now. But if you had the risk appetite for it, you've done pretty well this week. Looking at the term structures, you can see shift lower here in ETH, going back into a slight contango. Bitcoin also in contango there. Both curves kind of looking pretty similar for a change. Here you can see intra-week kind of what's happened. That front end really accelerating lower in Ethereum as we've seen spot just kind of stuck at these levels. Skew-wise, probably saw about minus 4.5 on Bitcoin skew in terms of puts trading over, and then that has bounced a little bit, and Ethereum hitting -6 at one point midweek in the front end, but has reverted back to about -2.3, as you can see. Another way to look at the skew surface here, the entire Bitcoin skew curve has been dragged into put premium, as you can see. I was wondering whether that was a bearish sign in terms of for the regime. Has it shifted to a less bullish regime if we pull the entire skew curve down? I actually had a really good conversation on my crypto podcast, Crypto Ultras Unplugged this week, questioning that, and with the head of sales at Zero Cap Digital, and he was saying, if it was really a regime shift, we'd probably be seeing more put skew coming into some of the alts. And we're not really seeing that. Long end call skew in ETH is still bid for calls there in the back. Things like a Solana are still trading with a call premium as well. So because of those alts holding their call premium, this looks more like rotation out of Bitcoin into the alts. And there's a lot of money in Bitcoin now, right? These treasury companies are holding, 100 billion plus probably now. There's a lot of insto adoption. And what do instos do? They generally like to either sell calls against their longs or buy puts. So there's going to be some structural hedging demand coming through on the back of how much adoption we've seen and how many inflows we've seen really over the last year. So I think it's more that I think this curve could reside in put premium for quite a while as there is a need to hedge Bitcoin holdings. And if Bitcoin's not ripping to the upside, then the instos are going to feel like, yeah, we're probably prudent and sensible to be holding some hedges against our longs, basically. All right. But overall sentiment does appear quite cautious right now on what we're seeing in skew, particularly in the front end there, as you can see, which are, clearly in put premium. And then closing out with the relative value, ETH Bitcoin spot is still consolidating on very low volatility. It's still hovering above 0.038, which does look to be an important level that I think it needs to hold above for ETH to continue the outperformance. Vol spread has been slammed this week, got up to like 32 last week, down to mid-20s now, as you can see. But to put it into context, even though ETH realized is coming down and this curve has been hit, the entire curve is still trading, most of the curve, at least out to December, is trading above 24. Okay, so I said the whole curve, but actually the real back end is trading a little bit lower, right? Let's call it in that 22, 23 area. The skew differential has got crushed a bit as well in the front, saying that there's no real call bias in Ethereum until we get a little bit further dated. Once we get past December and into March, June, there's where that call bid comes back, as you can see with this curve trading well over 1 vol there, basically in the back end. But as we look at the front, it's more in 0 to half a vol, so it's giving very little call bias to Ethereum. All right, that's your summary for crypto vol this week. Market looks cautious. There is still put premium in the front especially. So market seems to agree with me that the last leg down hasn't happened yet before we can really get guns blazing for a rally again. All right, I'll catch you guys back here next week. Cheers.
Hi everyone, thanks for making it to the end of the video. Remember, this is just a little taster of what we do at Options Insight. To get access to all our research, including my in-depth vol market insights, flows and positioning report, and my portfolio trades, and a whole lot more, you can sign up at options-insight.com. I'll see you soon.